Here from My Mortgage. What should you do now that the OCR has dropped again as of the end of November? Well, I'm recording this just after the drop, and as of yet, we have not seen any flow throughs into fixed interest rates. What does that mean for you if you've been sitting there floating for a couple of weeks? Probably my advice is still to wait till the end of the week. We are expecting that the major trading banks probably will start to drop those fixed rates, and that's probably going to filter through sometime in that next week or so. And generally it does happen within a couple of days from a drop. We've seen all of the major banks filter through into floating interest rates, which is expected. That's directly linked to the OCR, and that's fantastic. So for those of you who are on floating rates at the moment, that's going to drop your repayment, even temporarily, and the same with things like flexies and offsets and stuff like that. So they are all connected. So at the moment, still probably that conversation around 6 months versus 12 months and what that actually looks like for you. And the key difference is probably in the cost. There is still a pretty big gap between 6 and 12 months. For some banks, they are offering some 6-month incentive rates, which, to be honest, are pretty attractive. Not every bank is offering this, so talk to us about that and what fits for your situation. They are generally quite good if you're happy actively managing your lending, and you're kind of happy to chat again in sort of March, April next year. And by then we should have had the second OCR review upcoming in February, and that will probably be at least a 25 basis point drop. So again, I say we'd be seeing rates filter through back down into that really early 6% range. We may see 5% range. We may see something touch 4, but I think that would be very, very good luck. So looking at the moment in terms of what you should be fixing for 6 months, a little bit higher cost, but definitely an upside early in the new year. 12 months, a little bit more certainty. The need to sort of lock away that lending, have that consistency, sort of not have to worry about it, chuck your hands up to the end of next year. Really good option in that respect. Longer than that, very good reason for some people, but for most, definitely sort of sitting in those shorter term rates. So if you're unsure, definitely talk to us. We are managing these really actively for all of our clients at the moment. We want to make sure that you are getting the right deal and the right fit for your situation. And we're also doing a lot of restructures and even refinances, considering different banks and things like that. So please talk to us about what the right fit is. Reach out at mymortgage.co.nz, or you can email me directly, claire@mymortgage.co.nz. Talk soon.